On behalf of Investec, I welcome you all to the post-result conference call of Bajaj Auto. I also take this opportunity to welcome Mr. Kevin Disa, CFO, Mr. Rakesh Sharma, Chief Commercial Officer, and Mr. Somen Ray, the incoming CFO. And I also take this opportunity to congratulate Mr. Rakesh Sharma to being elevated as Executive Director and being a part of board member. Over to you, Kevin.
Sure. Thanks, everybody. Thanks for the interest. As usual, let's go for the Q&As, please.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Ashish Nigam from Axis Capital. Please go ahead.
Hi. My first question was on mix. How do we see product mix evolving over the next 2 years? So, let's say in terms of domestic, the CT100 has now reached a sizable number. It's, 36% of domestic volumes. So does this stabilize here or do we expect it to increase further?
You're talking of the next 1 year, 2 quarters, or how do you want us to reply?
Maybe the next 1.5 years, 6 quarters.
So what I see in the next 1.5 years, and Rakesh should definitely add to what I'm saying, is right now I'll break it up into the segments where we call the M1 segment, where we are predominantly there with the CT. But in the near term, what we're seeing very clearly is that the Platina is picking up traction. And therefore, as you know, the CT, while it is in a loss proposition right now, the Platina is in a profitable zone. So within the M1 segment, I see the Platina becoming a bigger pie, and that's demonstrated by the past trends. As you go forward, also in the short term, you're going to see us focusing a lot on the sports segment, where we have seen significant growth coming in onto the Pulsar segment with the introduction of the Classic as well as with the other products. So even in the Pulsar family, I would say that the growth from which we're doing about 75 to 80,000 numbers a month will go to 90,000. So in the short term, in the domestic part, I think on margin side and it will be balanced out with the Pulsars taking care over of the high profit segment, Platina evening out the negatives on the lower end segment. But as we talk of a 1.5 year situation, there will be more products coming in, primarily in the M3 segment. So therefore, I would say that overall domestic margins and mostly should go up purely on account of this mix change. The vehicles, new vehicles coming in the M3 segment, the Pulsar growing up in the S1 segment, and the Platina playing a much bigger role in the M1 segment.
Okay, and the CT100 profitability, at this volume, and I believe you've done some pricing action also, has that improved?
It has improved. So we have taken about the prices up about 1,800 rupees in the CT. So that has definitely improved the profitability, but yes, still in terms of profitability, it's in the negative zone.
Okay. And also, if just on a related note, the share of Africa within exports, that also hurts the export mix. How are we seeing the share of Africa within exports?
I'll take that. The share of Africa has been rising, particularly in the last 12 to 18 months, on the back of several economies in Africa doing better due to better oil prices and commodity prices, which they are dependent on. We think that the share of Africa, unless the sky falls down or something, given the current situation, the share of Africa will continue to rise. It will be the fastest growing region within our portfolio. So we are right now at about 45%. It could go up to about 50%.
Okay. So, that's helpful. My second question was about the hedges. So, Rajiv just mentioned on TV that, we can realize 73 from April 2019 onwards, and that can take margin to 19%. You can just talk about that a little more granularly. So, we've realized 69.4, and assuming the rupee remains where it is, how will our realization look for the second half and for FY20?
So, as far as 18-19 is concerned, I had taken the covers about 12 to 18 months back, when the rupee was at about 64, 65, and our entire purpose of the hedge was to cover our base cost, which was 66 rupees. So at that particular point of time, the cover that we took was ranging from 66 to about 69.5 to 70. So what you're going to see in the near term, that is for the next 2 quarters, is that we're going to get the higher level of the hedge, which is at about 69.5. To the extent there is an uncovered portion, we will be getting the spot rate. So therefore, my estimate for the quarter 3 and quarter 4 would be closer to the 70 mark, but not exceeding rupees 70. As we move into 1920, there the cover that we have taken is allowing us to realize somewhere near the 73.5% rupees to the dollar. Now, we are not taking a full cover, we are on a wait and watch mode, but to the extent the covers have taken, we are assured of 73 rupees to the dollar. Now, that is very important for you all to note. It's actually a 4 rupee realization per dollar extra. And if we are talking about a average run rate today of about $120 million every month, we are actually talking of about 50 crores coming in every month extra from 1st of April on account of this dollar change.
Got it. That's very helpful, Kevin and team. Thanks. I'll come back in queue.
Again, I put a rider to this. Like I said, that the 50 crores is going to come in, so that's on a like-to-like comparison as what we'll have today. As Rakesh has mentioned yesterday, there is no undue pressure from the markets for passing on this rupee realization to that. So this is the potential that the company has additionally into this kitty. So I would like to look at it and say that as a business on an ongoing basis, if I was to look at my margins today, as per my calculation is 18% and not 16.8% that is being reported, that 18% translates to 20% purely on account of this exchange rate difference.
Understood. Okay. Okay, thank you. Thank you, that's helpful.
Thank you. The next question is from the line of Pramod Kumar from Goldman Sachs. Please go ahead.
Yeah, thanks a lot for the opportunity and congratulations to Rakesh. My first question pertains to the domestic demand outlook. We heard Rakesh on television yesterday, even Rajiv, Mr. Bajaj was also on television some time back, and he did talk about a fairly good growth so far in the season for you. So if you can just quantify that, Rajiv did mention that on TV, but we couldn't kind of catch it. But if you can just provide some color on your performance so far in the season and in context of the industry, and are you seeing things kind of improving as the season progresses closer to Diwali?
Thanks, Pramod. We are in the middle of the season. So we've got done with the Dussehra, and now this is the run-up to the Diwali, which is the major part of the season, right? So really the dust will only settle by first week or second week of November which we'll get to know. So from an industry point of view, it is just a little bit of organized gossip which we can sort of bandy around, which is, inputs from how the transporters are behaving or what our field officers are reporting or some little bit of exchanges with our colleagues in the other companies. And that suggests that the season is not progressing as well as expected for the industry. It's in the negative zone right now. Maybe, the sort of feel one is getting is that it's about between -5 to 0. The season is particularly more severe on the automobile industry, so that's why a lot of signals are getting mixed up and getting reported as such on the television. Now, having said that, our numbers are looking much healthier than this. And that's why, I would like to make the industry comment only once all the numbers are in, because as against this -5 or odd, our numbers in a like-to-like comparisons, if I forget the dates, we just take the days, between when the low ends of that Pitru Paksha, as it is called, and it picks up to the Dussehra and to the 4 days after the Dussehra. If we compare it like last year, we also roll in things like what is the delivery which are being made but not yet sort of reported in the system. All that put together, we are growing in double digits. We had expected that we should be growing between 15 to 20% at the advent of the season, But I think we probably turn in between 10 to 15%. But, the next 2 days are very important. So I hope this is true, that, that our numbers, which we are certain of, the numbers which I'm telling you, are so much better than the industry numbers, which we have just gleaned from talking to different places. So that's what it is right now. I think we should be through with the season with, 10 to 15% kind of a growth.
And the second part of the question was, are you seeing any trends improving in terms of your own footfalls as we approach Diwali? Because there was some bit of confusion around insurance regulations at the start of Navratri and all that. Are the trends on as you track it on a daily basis on inquiry, walk-ins, dial-ins and all, is it kind of improving or is it kind of stable or worse?
Actually, I think we are sensing a slight improvement. Because at the time of Dussehra, this whole insurance imbroglio was too sudden and too close to the Dussehra thing. And I think whereas most of the, before the insurance announcements were made, the dealers were pretty upbeat about the season. Competition dealers as well as our own dealers. Then the insurance bombshells happened. And the interpretation of largely the market was that this is unfortunate. The timing is even more unfortunate. However, there is no option and people will digest this over a period of time and the consumer will start coming back, Now that has indeed played out like this, but it has hit it pretty severely during the Dussehra time. Now, as more and more time elapses, we are finding that, yes, it is getting internalized and there is a marginal improvement in the footfalls as we approach Diwali. But it's marginal. But directionally the curve is changing. There's no doubt about that.
And Rakesh, in your experience, having tracked even international and domestic market for the last few decades now, how long is the consumer, the period taken with the consumer to kind of absorb this and kind of come to terms with the new elevated cost of ownership? So normally, is it in months or is it in quarters? How long can this recovery kind of take time before it kind of gets reflected in growth for the industry again? In your experience,
I think it certainly takes something like 3 to 4 months. For an event like this to get completely digested and internalized, etc. But in a sort of a very counterintuitive way, actually being in a season period is, while it's a jolt, but also the 3 to 4 months may just get shortened to 1 or 2 months because in any case the customer is in a little bit of a buying mood. If customers waited for a long time, there is a lot of sort of bonhomie around. At least our category, it's a very important purchase to make in the season. People wait for this event. And they will be probably more positively disposed to shrug this off. So I would say, while it's a bad jolt for the season time, but at the same time, I think the digestion period is going to get shortened because of this atmospheric. So probably a couple of months, 2, 3 months. But then after that, we run into a very, very difficult month, which is December, as you know. So I would say that January onwards, this should be completely washed off the system.
Oh, great to hear that. And the last question is on the
Excuse me, this is the operator. Mr. Kumar, may we request you to come back in the queue?
Not a problem. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference call, please limit your questions to 2 per participant. If you have any further questions, you may come back for a follow-up. The next question is from the line of Ruchit Mehta from SBI Mutual Fund. Please go ahead.
Yeah, I just want a small query. So you gave some outlook on your motorcycle side of the domestic market. Could you just give a perspective on the three-wheeler side as well? How do you see it over the next 4 to 8 quarters?
The three-wheeler side is quite steady in the next 2, 3 quarters in terms of, that we will continue, I think, to incrementally expand our market share position. We have been every quarter in the domestic market, touching 1 lakh units per quarter, 30 to 33,000 units. Sometimes, we've been 93, 94, 95,000 per quarter. And that's also, a little bit of a reflection on our supply chain. We're not, while the nameplate capacity is there to service the 90,000 in a quarter, however, sometimes the mix and the timing imposes burden. So the market is left a little bit hungry. That's why I'm saying if it was a perfect match between the supply chain and the pattern of demand, we should be touching 1 lakh, which is a very, very sound number, which suggests that, the market share will continue to increase. You know that we have a very dominant market share, and we will keep chipping away and adding a couple of percentage points. The great thing about this is, the thing to note about this is that underlying this increase is the consistent reduction in the dependency on permits, because we have opened up segments in the large passenger segments in the interior areas where the new product introductions of the last 12 months or so have been received extremely well, backed by solid service and maintenance and care by the team. The large passenger segments and the budding new segment of cargo, our new product introductions have done extremely well over there, and we are gaining market shares for that. Now, in terms of growth for Q3, Q4, you might see the growth very muted because of a base effect. However, because the last year we had already started to see a big upsurge led by permits in the Q3, Q4 of last year. But we will continue to sort of be nudging 1 lakh units in domestic CV per quarter.
What's your probability that at some point three-wheeler growth sort of flattens out, or you could see a small dip of 5% odd levels also, over the next 8 odd quarters? Do you see any probability of that happening?
Yeah, this is a question which sort of is always hanging on our heads, and not just for domestic, but globally. Globally we continue to get surprised, I must confess, because we continue to sometimes feel that, okay, now, we're really doing a lot of three-wheelers, and there's a huge penetration which is being achieved, and it has to stop. But that has not occurred, Contrary to our expectations, we are facing a capacity issue. So I really, and particularly after, reducing our dependency on permits, I really don't see that the three-wheeler business internationally or domestic-wise is going to come down. Of course, behind this is the fact that there is a lot of developmental work which keeps on going on. We are seeing a very positive move in domestic as the three-wheeler, as the fuel is changing from diesel to CNG. The CNG penetration is advancing very steadily and very strongly in the country. As you know, we have a 80-90% market share when it comes to alternate fuels. And this gives us a tremendous tailwind to cannibalize market share from the competitors who are diesel dependent into this. So we have got a game plan which is anticipating the geographies where CNG is rolling out, and we are readying ourselves to convert the diesel-based demand into CNG, which is a far, far superior proposition in terms of paybacks and returns. So all these things when we put in, we don't see, any reason to think that three-wheeler demand will come down.
In a lighter vein, Kevin here, about 3.5, 4 years back, we were selling about 4 lakh three-wheelers domestic and exports. And that was a query that came up, and we were always concerned about that. This year we'll be ending the year at about 8 lakhs.
And just a query, because you said that typically a customer would take 3 to 4 months to sort of digest the kind of price increases happen post the insurance thing. We probably will be looking at something close to that, or maybe 60-70% of that once we hit the BS6 transition. And there, also, do you think that the customer would take a similar time period to digest that kind of a price increase? Or because it is well advertised or well known in advance, it could be shorter?
My personal call is like this. There will be unlike the digestion part over there will be a huge preponement of purchases. So as you've seen, the Supreme Court yesterday has said that all vehicles sold from 1st of April has to be the new BS6 norms. Therefore, what I see happening is that there will be a huge production surge and demand that will take place in 1920, and there may be a 4-month lag that will happen before the people start buying in 2021 as a new price. So it's not so much a situation of digestion of that, it will be a preponement of purchases.
Okay. Fair. Thanks.
Thank you. The next question is from the line of Binay Singh from Morgan Stanley. Please go ahead.
Hi team, thanks for the opportunity. First question is that when you look at the sales promotion spend on the domestic business, we had the hat-trick scheme in last quarter, the 555 scheme this quarter. So is the spending going up on a sequential basis, or is it sort of broadly the same?
It fits within the overall budget of the company for the year. Now, what you're going to see in between quarter 2 and quarter 3, as you see, know that the 555 scheme is implemented in Dussehra as well as in Diwali, which is going to be in October, November, which is going to be on the retails and not on the billing. And hence, since retails are going to be higher in October, November, the actual payout on the 55 scheme will be higher in this quarter as compared to the hat-trick scheme last quarter. So yes, if I look at quarter-on-quarter basis, you will see a higher ad spend that will come in quarter 3. Having said that, there are no major product launches that are taking place in quarter 3, so budgets that are kept for the product launches, etc., will be used for this purpose. So net-net, the overall percentage of advertisement and to the sales will be by and large the same.
Okay. And secondly, when you look at 2019 versus 2018, you take into account rising rates, you take into account the insurance cost, some bit of incremental ABS cost. Do you think the industry will have a stronger year in 2019 versus what is happening in 2018? Or do you think the demand, we could actually be now in a sort of a more longish,
You're talking of financial year 19 or you're talking of you should be talking of financial year 20, right?
Yeah, meaning we can either make it financial year or calendar year, yeah.
So I would put it as my own estimate, Rakesh should correct me, is right now I'm talking of only of the motorcycle industry. We are at a present at about a 13% growth. My own call for the whole year basis will be somewhere near the 8 to 9% growth for the whole year basis.
Right. And for next year also, do you think...
I would say that the growth will come in significantly higher, again because in the second half there will be preponement of purchases that is going to come because of the BS6.
Right. So that will basically support. And just last question on INR versus margins. Historically, we've seen, right from 2011-12 that the weaker INR hasn't really translated into stronger margins because some of your end markets also see currency depreciation and at times you end up passing that. So at this point in time, what sort of a confidence will you have in sort of guiding for incremental 150 or 200 basis point of margin cushion?
No, I'm not guiding on that basis. I'm just trying to say that the strategy that we are following today has to keep in mind the fact that at present I'm losing this 2% on account of exchange rate. As you go forward, the rate and the pricing is determined by competition action, competition prices, Chinese prices, etc. Now, despite the fact I'm getting 69 today, whereas competition, maybe it's a TVS, maybe it's a Hero, maybe the Chinese are getting the benefit of the higher benefit of the depreciation, I have no pressure right now to change my prices. And therefore, on that assumption, as I go into the next year, I will be in a position to retain this 4 rupees as it stands today.
Okay.
Because it's only me as a company that's getting 69, whereas the rest of the competition probably is getting 73.
Right. But whether will that translate into, I know it's difficult to talk about FY20, but in your view, sitting today, do you think the FY20 margin, reported margin for Bajaj can be 150, 200 basis points higher? Or do you think on the domestic side, because of entry-level models or something, it can get compromised?
Like I said, and which Rakesh had mentioned yesterday, is going to be the blended margin. So when we say that the domestic motorcycle is going to improve, in that sense, I'm also saying today, for example, as I go to the next year, the Platina is going to be higher. There will be new vehicles in the M3. The sports segment will be higher. So motorcycle division itself will show higher profitability in the next year as compared to the current year. As far as the three-wheeler is concerned, there is no problem at all in terms of the costing, pricing, and the ability to pass on costs. And therefore, for example, when I come to the exports, there's going to be a top-up in the margins that we have, which is again very healthy in excess of 20% to get this additional amount. Now, whether Rakesh and his team would like to plan to keep the entire amount or use some part of that to build up market share, etc., is their call.
Right. But it's a cushion that you effectively will have. Great. That's it from my side. Thank you.
Thank you. The next question is from the line of Pramod Amte from CGS-CIMB. Please go ahead.
Yeah, hi. Two questions. One, whatever the aggressive pricing which you had shown in different sub-segments seems to have definitely delivered on the market share reversal. Have you, other than the market share reversal, what are the internal targets in terms of which you have achieved, either in terms of footfalls or conversion rates and all those things? And how much of these incremental market share which has come through is predominantly these aggressively priced products, and hence it might be, is it worthwhile to continue them in a similar strategy?
See, we had somewhere in February, March, reoriented our strategy and brought the focus on two segments. One was the entry-level segment, and where we felt we had the biggest opportunity looking at the vulnerabilities of competition and our own product portfolio and brands. We had the biggest opportunity for volume growth. And the second segment was our traditional stronghold, which was the sports segment, where we have the Pulsar. And that we felt we could gain. But since that segment is small, it would not yield too much of volume, but certainly it would be healthy for the company in terms of its margin and EBITDA balancing. And in the last 6 months or so, we have played this strategy. The go-to-market strategy was to sub-segment these two segments and offer products at different price points, as also some value-added products at the higher of the sub-segments within the segment. So that's why we went with CT100 as a price warrior, but at the same time, we promoted the Platina, where our margins are better, in the same segment. And particularly in the last couple of months, we have found that the Platina growth and volumes are now overtaking the CT100, and we are making decisive inroads into both first TVS and now into even Hero. So that's churned the most amount of volume for us, and we've gained about 6-7% market share, and there is no reason for us to relent on this. We will continue to drive this, but we are going to very quickly, you will see, enhance the product portfolio. We'll now be intervening at the top of the sub-segment. So in the entry level, we'll now be intervening through products, better value products at the top also. So that will also hopefully balance the margins a little bit in that entry level segment. Exactly the same thing has been done in the sports segment, where we split the sports segment, our offer into three. At the top is the twin disc Pulsar, and the traditional Pulsar 150 is in the middle, and we brought in the Pulsar, what is loosely called the Pulsar Classic, at the bottom, in a bid to upgrade and expand the sports segment and take people from one. Now that also has worked, but what is a very, very welcome surprise to us is the extent at which the twin disc has performed. In fact, the twin disc is the single largest growing brand for us. It has outstripped the growth of CT100, Platina, and everything. So this is our top line product. It has grown the fastest, so because of the twin disc, the Pulsar 150 has demonstrated collectively the fastest growth. And we're going to continue this. We're going to sort of embellish this offer in the sports segment also. So the strategy, the outcomes are, most importantly, the outcomes which we are seeing are very well aligned with the strategy which has been thought out, and we are seeing no reason to sort of shift gears or anything, and we will continue to drive this forward. One consequential benefit of this, I think you alluded to it, you wanted to understand the impact on the footfalls of the channel. One very important aspect, which I think is helping us in the season, is the very positive flow onto the channel. The dealers are feeling energized. They're seeing a very decisive focus by the company. They're feeling like putting in some investments of their own in, the local outreach, which is so important. And we are seeing that kind of shift occur. So that is also very precious from our point of view.
Sure. Thanks for the detailed answer. If I can ask one more question related to three-wheelers. You have announced a capex and a capacity uptick after a long time in the three-wheeler segment. How much of that you feel do you see more confidence of three-wheelers sustaining momentum with the BS6 helping the demand shifting from LCV to three-wheelers? Or do you see more of an export opportunity opening up for the three-wheelers? What gives you that confidence to go for a 20-25% uptick in capacity in the three-wheeler segment?
See, like I said before, we definitely see a steady growth in demand. We are already pushing capacity. Our capacity is something like 850,000 and on an annual basis, and we're trying to push this to 1 million or so. One new factor which will start to come in, I think about in 6 months' time, is the development of Qt. This capacity is a consolidated capacity between three-wheelers, large three-wheelers, and Qt. They all get done in the same plant. Hopefully with now Qt being approved for registration in about 18 states of India and the seeding work already commenced, we feel that this will, the demand will start to build up next financial year. And though the numbers will not be very big, but it does add a little bit of complexity in the manufacturing line. So given all that, the outlook on conventional three-wheelers being steady, the appearance of the Qt, rolling all that in, we think it is important to be slightly ahead on the curve and go for a 1 million capacity. And you see, it's not a greenfield project, so the capex numbers and all are very meager. And a lot of it is also at the vendors.
Thanks for the detailed answer and all the best for your new role.
Thank you.
Thank you. The next question is from the line of Aniket Matre from Haitong Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, a couple of follow-ups. You indicated to us you have hedged FY20 partially. Could you give us an indication how much of your exports exposure for FY20 is hedged currently?
No, that we don't share. It's confidential, but let me just say that it is not significant. We have, given the rapid depreciation in the rupee, we have, as of now, taken a hold position.
Okay, understood.
But wherever we have hedged, we have got a minimum realization of about 73.
Understood. But sir, then in that sense, it won't be beyond 10% of your exports exposure at the moment?
At the moment, that's right.
Okay, understood. Thank you. My second question was around the fact that, your strategy of gaining market share is clearly working right now, but it's coming because of your higher promotional expenditure. So, hat-trick happened in July, August, and then we had this 555 scheme continuing in festive season. Given that demand is weakening now, do you expect the need to extend these promotional schemes beyond the festive season to maintain your market share?
See, we will take these calls as we sort of exit this quarter and based on the judgment as to how the season has gone and how we are seeing the demand. So it is in our radar. We have not formulated it, but I would not rule out that, if in January, February, March, selectively in some regions we got to pepper up things, sweeten the deal a little bit. Maybe there are a couple of product introductions. We need to give them, turbocharge their introduction. I do not rule these offers out, but they will not be on a national and grand scale like the 555.
Great, sir. Understood. So just one final thing. On the Platina, Kevin sir indicated that the Platina is profitable at the moment. Even after the 555 scheme, the Platina is profitable?
Oh, yes. For us, for example, when we talk of this 555 scheme, etc., what we do is we take the total adjustment cost per vehicle that we are taking under different brands, and that is adjusted for that.
Okay, got it. Great, sir. Thank you so much. Thank you, and all the best.
Thank you. The next question is from the line of Amin Pirani from Deutsche Bank. Please go ahead.
Yes. Hi, sir. Thanks for the opportunity. I have two questions. One is more on your strategy. Obviously it is appreciated that, you have done a lot of price corrections in a lot of segments to gain market share.
I'll say strategy over here and come out with a sell report, huh?
So what I want to understand was that, sir, at the end of the day, eventually, I'm assuming that, earnings growth or operating profit growth is something that, you want to look at. So right now that is not visible. So is it just more of a timing thing and, you feel that after you've reached a certain market share scale, even despite these measures, you will still have a stronger earnings growth, or how should we look at it? Because, you just mentioned that, you may not necessarily reduce the incentives even in 4Q, depending on how the market is. Then we may continue to have a very strong volume growth, but earnings may continue to remain muted. So how should we look at it, from a 1 to 2 year point of view?
So let's look at that. Even if you look at it today,
yeah,
I think in the earning growth, whether you take at the operating profit level, my operating profit level was in quarter 1 was 1280 crores.
Yeah.
Despite the hat-trick scheme and despite all the CT100 selling, etc., it has gone up to 1355 crores.
Yeah, yeah.
That again compares very favorably with the 1236 crores.
Yeah.
Now, you all are making a mistake by just saying that my margins have come down, etc. But look at the top line growth that is taking place. So when you're talking of absolute profits, there's a significant amount of growth taking place. Even if you take it the bottom line, the profit at quarter 1 was 1115, goes up to 1152 versus 1111.
Yeah.
So absolute profit is growing. The entire cash generation is growing.
Yeah.
Again, I'm taking this opportunity to repeat to all of you all that 16.8% is not appropriate. It is 18%. Because so many of you all are taking these figures, there's the CSR expenditure sitting in these expenses. Can you knock that from my EBITDA? So when you just take a ballpark figure and jump to the conclusion that my EBITDA margin has come down from 19.2 to 16.8, I think that is factually wrong. You need to look at the data, which I'm more than happy to share with any one of you all who want the information.
Sure.
The factual figure is, in quarter 1 of the current year, my EBITDA margins were 18.4. Right. My EBITDA margins in quarter 2 is 18, as against quarter 2 of last year, 20.8.
Yeah.
Okay. So despite the fact that my turnover has gone up, my sales have gone up to a record rise, my market share has gone up from 15% to 20%, my EBITDA margin from 18.4 in quarter 1 has come down to 18. So I don't see any reason for anyone to start jumping to this conclusion that my strategy is wrong, etc. Even if one wants to question my strategy, you're really questioning the strategy of 14 or 15% of my overall business.
Yeah.
You have no problem on the exports. You have another, like I said, 180 crores per quarter sitting in my cushion pocket for exports.
Yeah.
You have no problem on three-wheelers is showing a growth. None of you have asked me the spare part figure right now. I crossed almost about 1,500 crores of turnover in the 6 months. Everywhere we're seeing growth. What we are focusing on this 15-16% of my total turnover, where I played a bit of a price card, which are attributing completely to margins.
Yeah.
Now let's take competition. Let's take my biggest competitor is Hero.
Yeah.
Sequentially, has the margins changed? It has.
Yeah.
It has moved downward.
Yeah.
Have they played a price card? Have they had a CTV game? No. It's the industry. That's the story.
Yeah.
So the point that we are saying, at this strategy that we're continuing, cannot be you start a strategy and stop it the minute you go reach a point. So it will be a long-drawn strategy for the entry M1 segment.
Yeah.
But that is only one part of our strategy. Strategy is built on price, products, performance, people. So there will be strategies involved in network. There will be strategies involved in products going forward. KTM is there, Husqvarna is there, Triumph is there. Then you come into the M3 segment. Where am I in the M3 segment right now? I'm hardly there. I just got the VO there.
Yeah.
But the company is going to come out with products in the M3 segment. So if, you look and make a report, not quarter on quarter, but over a 2-year trend, look at the positive angle and see that I'm not present in M3, I get the M3 segment there. At the M3 segment, I will definitely get double-digit margins. And therefore, in the long term, barring unforeseen circumstances, barring no crazy reaction by competition, my margins will inch up year on year.
Yeah. And so just on the premium side, while Pulsar has had a very strong growth this year, the Avenger, which I believe is also an equally high margin product, has seen a decline. So can you highlight what is happening there? I mean, is that sub-segment not having any favor with customers, or is there a product refresh issue that is causing the problem there?
Yes, you're right. The Avenger sales has slowed down.
Yeah.
I think some bit of product intervention is needed. The end of Avenger, which was widely successful, was the 150cc.
Yeah.
However, it was also felt at the same time that at 150cc the Avenger was slightly underpowered, particularly for certain areas. And as a form, the 150cc is a little bit of a smaller capacity for a cruiser kind of a form.
Yeah.
And we pushed that to 180.
Yeah.
But in doing so, what has happened is, while it has improved it as a product proposition, it has found favor with some, but there is a little bit of an intimidation. Now it's only 30cc, but people do feel a little bit intimidated crossing the 150 fault line. And I think going forward, we will address that, because the previous experience has shown a very nice sort of a segment which almost got created by us in the sporty commuter, urban commuter, relaxed commuting kind of approach. So we will be sort of working on the portfolio a little bit from a product intervention point of view. Hopefully that will secure us, a wider sort of acceptance and return to higher growth numbers.
Okay. Thanks for the opportunity, sir.
Thank you. A reminder to the participants to please limit your questions to 2 per participant. For any further questions, you may come back for a follow-up. The next question is from the line of Sahil Kedia from Bank of America Merrill Lynch. Please go ahead.
Thank you for this opportunity. One question on the export business. You said that the share of Africa has been going up. Can you help us understand how the product mix is changing? I know that there was a plan some time back to have more non-boxer exports. How is the plan changing, and what is the contribution from some of the new markets that you are entering, and how should we think about this on a 2-year basis?
Well, the thing is that while we are experiencing growth in the, let's say, the higher end, which is the sports segment, Pulsar, etc., these are doing well. They're improving their market share. But this major turn in Africa in the last 12 months or so tends to overshadow everything. Now, Africa itself is largely, it's a taxi market, and it's largely driven by Boxer, so which is a 100cc product. at the bottom of our portfolio. And it's, of course, the single largest selling brand across Africa now. A lot of faith people have in it. We cannot, we cannot deal with the arithmetic of this, because if this portion goes up, even if pulsars are advancing well in Latin America and all, they can never keep pace with the return of Africa. What we have done in Africa, though, is introduce the 150cc, and within the 150cc, we have introduced some higher order variants. We've also introduced the pulsars selectively in a few countries where we feel there is probably going to be some traction for personal commuting. These collectively, let's say the pulsars and the Boxer 150s and the the X series and Boxer, where our margins are better, the realizations are better. They're in combination still only about 20% or less than 20% of the Africa portfolio. They're increasing, but it's at a slow pace. So I won't see any big changes, but I'm definitely seeing incremental improvement in the mix in Africa.
Okay, and in terms of country-wise, the share, so I understand what you said about Nigeria improving tends to have a much higher overall weightage on the numbers, but how are some of the other markets that you have entered recently? How have they scaled up? Are they in line with your expectations going up? I mean, can you give us some sense of how important they have become? I know probably this year the share would be lower considering that Nigeria has done well, but can you just give us some color on really how they're doing?
Well, actually, it's not just a Nigeria story. We have got a significant presence in East Africa, which is Kenya, Ethiopia, Uganda, and Tanzania, Sudan to some extent, but Sudan is a smaller player. We have done extremely well in this geography, which collectively is almost equal to Nigeria. For example, our market share in Uganda is today at 95%. Our market share in Kenya is about 40 to 45%. Our market share in Ethiopia is upwards of 60%, I think 65% or something. There is a little bit of changeover on the route to market in Tanzania, but we should be restoring our market shares there soon. So East Africa, and also I must point out Democratic Republic of Congo, which is again a very big emerging market where we do about 5,000 to 6,000 units, and the next competitor does 1,200 kind of units. That's also doing extremely well. Our only trouble area amongst the large markets is the West African market, the Francophone part of West Africa, which is west of Nigeria, I'm saying. This is fairly large. Actually, the history of this place is that we had a issue with our trademarks had been registered by somebody else, and we had to fight a long-drawn battle to get our trademarks back. We got them back about 18 months back, and we sort of made an entry only 18 months back. In the meantime, competition is pretty entrenched over there. These are large markets. Now, this is a market where we are struggling a little bit, and I think it's going to be, it will take 2-3 years for us to sort of bring it to, a very good, respectable level of market share. So I would say Francophone Africa part, which would probably be 30% of Africa. 70% of Africa, we are right on top with very dominant market shares and seeing very good growth.
All right, sir. Thank you so much for this answer.
Thank you. The next question is from the line of Kapil Singh from Nomura Securities. Please go ahead.
Yeah, hi, sir. Just one clarification. You mentioned that the Platina volumes are overtaking CT volumes.
Not overtaking, growth, Kapil.
Okay. Okay, I misunderstood that because the volumes are almost double over there.
Yeah.
And how do you expect the CT volumes to shape up? Have they reached the level where you are comfortable, or you see them ramping up further from these levels?
My call basically is that the CT volumes will remain by and large static at this particular point of time. But you will see significant improvement in the Platina because we plan to come up with some more changes in the Platina.
Okay. And same thing, we took some actions in the pulsar segment as well.
Correct.
So what kind of results are they delivering?
They are doing very well, because what we're seeing is in the overall pulsar, the numbers have gone up to about 80,000 numbers. And there we are seeing the major portion of the sales that is taking place is on the high profitable twin disc model. The entry level pulsar, or what we call the Pulsar Classic, has been able to add about 7,000 to 8,000 numbers extra, and I'm talking of September. If I take the average for the quarter, 6,000 numbers. That is giving us a lot of encouragement and this thing to upgrade the Classic with some new designs and features, etc., which may be able to enhance it further. So I won't be surprised that getting into the fourth quarter of the current calendar financial year, we should be pulsars sitting at about 90,000 numbers.
Okay. And lastly, just wanted to check on the competitive intensity in export markets. How is it shaping up?
I mean, there is no significant change. Competitive intensity remains the same. There is, if at all, there is a little bit of pricing pressure continuously from the Indian competitors. So you know that we have Japanese competitors, Chinese and Indian, largely in the mass market. The Japanese and Chinese have not really changed their strategies too much. I'm giving you a broad brush overview. There may be one or two markets here and there. I know that Yamaha has sort of been very aggressive in one or two Latin American countries. Maybe it's a local initiative. But we don't see that much change. But yes, we are finding consistently TVS and Hero underpricing compared to us in almost all the markets. So but that is not a new phenomenon. That is something which is which has been there for about for a couple of years. I've definitely observed that. So no change in competitive intensity.
And we've not really changed our pricing in export markets.
No, largely we have not changed our pricing. You know, there are a couple of markets here and there where we have a significant presence, and if we feel that that market is in distress and we need to do something to the price to stoke the demand, then we will do that. But we've not really changed any pricing majorly, upwards or downwards.
Thank you, sir. Thanks a lot.
Thank you. The next question is from the line of Sandeep Manan from Franklin Templeton. Please go ahead.
Hi, sir. Thanks for taking my question. During the December 14 Investor Day, you had shared an idea of the end markets, the export markets for two-wheelers. Could you give a broad idea of what is the size of these markets? And other thing is it fair to assume that Africa is the main region which will grow because all other regions are fairly mature in terms of per capita income and penetration, two-wheeler penetration?
From a growth point of view, actually the penetration is not yet reached maturity levels in most of the emerging markets. Apart from some of the, those old tiger economies of ASEAN, Taiwan, bit of Indonesia, Thailand, these places, where we are seeing, penetration is largely being done. South Asia, which is Nepal, Bangladesh, Sri Lanka, Middle East, Egypt, Iran, Iraq, all these areas, penetration is still low. Africa, the penetration is low. Latin America also higher than Africa, but penetration is still low. So if there is a supportive macroeconomic environment and, currencies are not too volatile, if the political, there is no major revolutions and all that, then we see outside of ASEAN, in South Asia, Middle East, Africa and LATAM, positive growth. Africa will continue to outstrip, but we see this as a very positive growth. In terms of the market size, overall, I'm only talking of the markets which we are in right now. So we are not in China and we are not in Brazil, out of the big geographies. And rest of the emerging markets, Southern Hemisphere, we are we count all of that in. So if I keep that away, then the overall market size is about 6.5 million units of motorcycles. I'm not talking about scooters or step-throughs. And in that, as you can see, we have almost a 30% market share.
Okay, thanks.
Thank you. The next question is from the line of Sonal Gupta from UBS Securities. Please go ahead.
Hi, good morning, sir, and thanks for taking my questions. I just had a couple of housekeeping questions. Sir, could you tell us the spare part revenues for export and domestic for this quarter?
Spare parts for the quarter you wanted, it is for exports, for domestic it is 567 crores.
567.
567 crores, and for exports is 243 crores.
243 crores.
As against the first quarter was 62 crores, so we have seen a very good growth in spare parts in quarter 2. And in exports it was 185 crores going up 243 crores.
Right, sir. Right, sir.
So if I was to take quarter and quarter, overall spare parts has grown by 20%.
Right, sir. And just on the overall export revenues in rupees, could you give that?
In total rupees, if I was to take the total exports, it stands at about 7,132 crores plus 243 crores of spare parts.
Sorry, for the Q2.
For the Q2, yeah. So just take 7,086 crores of vehicle exports and 243 crores of spare parts exports.
7,000 crores. Isn't that, I mean, like, for the, you're giving for the first half, I thought like 7,000 crores is a...
One second, sorry, I stand corrected, please I stand corrected. Exports is 2,879 crores, and of that you'll have to add exports of 243 crores.
Okay, plus 243 for the spare parts.
I stand corrected, sorry. Yeah.
Okay. And sir, just on the financing side in the domestic market, how are we seeing the trends? Any issues we're seeing?
No, fortunately for us, we have got Bajaj Finance that is well capitalized and they have no shortage of funds whatsoever. So I think on financing, Bajaj Auto is not facing any difficulties whatsoever. And I would say that auto finance has been extremely well, doing extremely well right now. In fact, what I understand from my colleague, Mr. Rao, that in September they had a penetration level of almost about 48%.
Okay. And just lastly, have we taken any price increases on domestic motorcycles from October?
We did it on 1st and 2nd of November. October. We did that.
So what would
about 500 to 1,000 rupees on a motorcycle and about 1,500 to 2,000 rupees on a three-wheeler.
Okay, sir. Great. Thanks a lot. I'll join back the queue.
Thank you. The next question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, what did this sales volume of Classic in the last month, 7,000 to 8,000? What was the number for this twin disc variant?
I would say that it is approximately, the twin disc variant is about 40% of the total sales.
Okay, but going ahead, do you see that...
Excuse me, this is the operator. Mr. Tiwari, may we request you to use the handset? Please, your voice is echoing.
Is it better now?
Yes.
Yeah, it's better.
So, do you see the Classic variant sales in terms of contribution to the Pulsar can go up over the next 2-3 quarters, or do you think that will probably remain around, say, 10% or so?
I would say that there would be certain activities being done on the Pulsar Classic. They may be coming up with, I think Rakesh will correct me, some graphics and all that will take place. So I would say that the growth of the Classic will be higher than the growth of the overall Pulsar portfolio. And hence, while overall numbers of the Pulsar will reach close to 90,000 quarter 4, the percentage of the low-end Classic may go up, inch up by 1% or 2.
Okay. And if you look at the volumes of Pulsar 180 or 160cc, basically we think there the volumes have come down. So I think the twin disc is impacting the sales of that variant. So how do you see that and in that segment particularly?
Well, what we look at is in the total portfolio and the total profits over that. So what we try to ensure is while we'll have these vehicles, overall profitability will always increase. So even if there's a switch from product 1 to product 2, while the percentage may make a difference, the absolute profits by and large remain intact.
Okay. And lastly, on the three-wheeler export side, there also we're doing almost 1 lakh per quarter now. How do you see that shaping up over, say, next 6 or 8 quarters?
The three-wheeler exports is expected to remain steady at this level. So we don't expect it to really shoot up or anything. But it's pretty steady business at about 30,000 units. And we think that that's what it will come in at.
And which country is basically driving the growth? Is it still led by Africa only? Or there will be some pickup we're seeing other places also?
No. Actually, there has been a significant change in the composition of the three-wheeler business. It's not Africa which drives the three-wheeler thing. It's really it's very, very widespread now because the last 2-3 years we have been investing a lot of market development effort. So, we've got big growth in ASEAN, basically Philippines and Cambodia and all, where we are doing, about 3,000 units. We've got a big market in Egypt and Iraq, which is the Middle East, let's say. That started contributing 10,000, 11,000 units. There's always the South Asia, which has actually come down, but there is Bangladesh. Nepal is a new market, Sri Lanka, and some new markets in Latin America. Nigeria has moved up. So I would say the quality of the three-wheeler portfolio in terms of countries is now very, very widespread, with about 25% of the three-wheeler sales coming from markets which we have entered in the last 2 to 3 years, which will, I think, continue to drive the growth going forward.
Okay. And lastly, if I may ask...
the operator. Mr. Tiwari may be requested to come back in the queue for a follow-up.
Sure, thank you.
Thank you. The next question is from the line of J.M. Mehta from Edelweiss Securities. Please go ahead.
Yeah, this is Chirag here. Thanks for the opportunity. So 2 questions. One, on the exports, so just a clarification for FY20, what would be your base rate of INR? And I presume it would be more of range forwards for you?
So as you're going to FY20, I would simply not to take a cover, but yes, as a finance team, what we'd like to see is the rupee starts appreciating from now onwards, we may start taking the cover. So my view is as an average, I would look at about 72 minimum to get for the next year.
And just a follow-up on this advertisement spend, you alluded to that. So how does the accounting of this 333 or 555 scheme work for you? Is it a part of your ad spend or it's netted off in your revenue?
No, it's a part of the ad spend.
It's a part of, and generally this scheme would add up how much? On an annualized basis, it would go up by how much versus a normal budget?
No. Let me just clarify this thing. The total amount that we are talking about is all a part of the total ad budget that Rakesh has got himself sanctioned for the whole year. Now, in that, Rakesh decide whether it should go direct to the customer through a scheme or whether some amount should be spent to the television mode. Which is there? So the overall budget for the whole year is already fixed as a percentage of sales.
Okay.
The next question comes in, how much of this gets netted out for the revenue and how much gets netted out from the shown as expenditure. Whatever the amount spent directly to a product, say for example insurance off, that amount will get netted out from the sales under 115. So therefore in Q2, for example, under the hat-trick scheme, amount that went directly to the customer of about 28 crores has not been shown in expenditure but has got netted out on the revenue.
Okay, this is helpful. And so just one last follow-up. So what I understand is that there is no likely to be further aggression in terms of incentivizing customer from the current levels that we are, especially in the M1 category. So is it right that the level of incentivization that you intend to use for customer is a stable at this point of time, or there could be further increase in this activity that could go?
We will do everything possible to incentivize the customer, but that will be from products and not necessarily from price.
Okay. No, I was more coming from the fact that seems to be some knockdown on margins on certain products because of the strategy that you have adopted. Can there be a further?
Like I said, there is the M1 segment and that too only on the CT, which is 14% of my revenue. Nothing else. 86% remains intact.
So even in CT, we can assume that a level has been achieved. There doesn't seem to be a further case of major incentivization.
So if you're meaning, referring to only fiscal or incentives for the customer, that's what you're saying is correct. In fact, as Kevin pointed out earlier, there has been actually price increases on CT also in October. But, having said that, I don't want to bind ourselves into this because let's say the competitive scenario completely changes in December or Jan, then we will probably respond. But as things stand now, 1st of October, we increased prices on CT.
Yeah, and just one last, on the Qt front, do you think is there any risk of some cannibalization with three-wheelers?
It's a very new category, and certainly there will be some cannibalization, but it will be marginal. From our experience in overseas businesses, we find that that cannibalization is actually very, very marginal because it tends to open up a new segment. There are people who jump straight, people who don't get into three-wheelers because they want a better status product, they get into Qt. There are certain areas where the three-wheelers are not allowed. That opens up with Qt. But how it unfolds in domestic business, frankly, we have to see. We will be watching this very, very carefully, state by state. So let's see how that sort of works. But we don't expect it to be significant. It will be there, but marginal. And let's see how it sort of occurs.
Yeah, thank you. Thank you very much, and all the best.
Thank you. We would request participants to please limit your questions to 2 per participant. For any further questions, you may come back for a follow-up.
Okay.
The next question is from the line of Hitesh Goel from Kotak Institutional Equities. Please go ahead.
Hi, thanks for taking my question. So just wanted to ask, in the African market, have you seen Chinese also becoming aggressive because they're also getting some gains on the US dollar, right? So just want to check the pricing scenario from the Chinese versus Indian makers there.
So like I said before, Chinese are underpriced to us, but we have not seen a shift in the Chinese pricing strategy between, let's say, 6 months back and now. That is really not, on an overall sense, being seen.
Okay. And sir, my other question was on the basically the domestic market. This 5/5 scheme, like you said, basically is basically some part is getting netted off. The insurance part is getting netted off from the revenue, and on the warranty and all, it will be netted from expenses, right? So will that be a hit on the margins in third quarter because this was launched on 5th October?
Can you just repeat the question, please?
I'm seeing this 5/5 scheme, which was launched right in the Dussehra and Diwali season. So this will have a greater impact on margins on third quarter as compared to second quarter because you will not get this rupee gains in the third quarter. How should we look at it?
So what I said was, I have built the vehicles in the second quarter, correct?
Yeah.
I've been stock since September. Now, the retail takes place in October and November. So you'll be having almost about, say, theoretically 5 lakh motorcycles sold in October and November. The 5/5 scheme benefit is at the retail level.
Okay.
So the payout on this 5/5 scheme will be much, much more higher in the second quarter.
Okay, because you've already given the dealers the payout in the second quarter.
It will be much higher in the third quarter.
Third quarter, right? So that is what I was asking, yeah.
But my billing will not be the 5 lakh numbers.
Oh, okay. Great, sir.
Because the incentives on retail and not on billing, there may be a slight miss in the margins.
Okay, sir. Thank you.
Thank you. The next question is from the line of Gunjan Pratyani from JP Morgan. Please go ahead.
Yeah, hi. Thanks, sir, for taking my questions. I have two follow-ups. Firstly, on this financing which you shared, 48%, has this materially changed for you in last 6-9 months, given the volume growth is more coming from the entry segment? And also, how much would Bajaj Finance be of your total volumes financed?
Ma'am, as I said, in the month of September, Bajaj had a penetration of 48%. That means 48% of the vehicles got financed to Bajaj Finance. I see Bajaj Finance growing from an average of about 41-42% to about 48% in September. But at the same time, I would like to add that we have introduced other preferred financials into our system, including L&T Finance, including a few of the big financials. So I would put it approximately about 50% plus of our total vehicles will be financed through organized financials.
Okay, got it. And secondly, this new product launch which you referred to in the M3, can you share something around it? Like, is it going to be in one of the existing brands, or what is going to be the positioning, and when can we expect anything around it? Any timeline?
What I mentioned is, in terms of a query that came in, is the trend line of margins and this thing over the next 2 to 3 years. And that's why I said, while I'm really absent in the M3 segment today, going forward, we will certainly put in a vehicle in the M3 segment. What that vehicle is, whether it's going to be a new brand, a new vehicle altogether, at this particular point of time, we will not be able to share.
Okay. And last question on the capex, can you give some guidance? What will be for F19?
At this particular point of time, it's a work in progress, but I would estimate it to be a total figure approximately about 300 crores, which will include total capex for debottlenecking, for R&D, as well as for new dies tooling for new models.
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Raghunandan from Emkay Global. Please go ahead.
Thank you, sir, for the opportunity, and welcome to Mr. Soman Ray. Kevin, sir, I had a query. Can you share the profitability of domestic two-wheeler and exports?
No, we don't share that. Individual division-wise, we don't share, please.
I mean, approximate range as to, generally, like three-wheelers exports used to have 30 to 35%, domestic three-wheeler was 25 to 30%, and export two-wheelers was about 20%. So a broad range, if you can share, that would be helpful.
I would be more than happy to share that. As I've always mentioned, in exports, we are well over the 20% mark. In three-wheelers, we are well over the 20% mark. In spare parts, we are well over the 20% mark. In the sports segment, that is the Pulsar family, etc., we are very close to the 20% mark.
Understood, sir.
That's 75% of our business.
Got it, sir. And where would be the Platina? That would be single-digit margin?
Single-digit margin.
Got it, sir. Got it. Thank you, sir.
Thank you. The next question is from the line of Vijay Gyanchandani from Elara Capital. Please go ahead.
Yeah, thanks for taking my question. So this is Jay Kare. So I just wanted to understand, in terms of your festive demand, you mentioned that Dussehra has been relatively softer than the earlier part. So would this softness be largely led by the rural market, say from first 6 months versus the Dussehra festival?
The softness in the Dussehra period of the festival is actually, the news we are getting is right across. It's not really dependent on rural or urban classification. State-wise, we feel that, Gujarat, Maharashtra, these places, the West has been a little bit more soft than the North.
Got it. Sir, and just on your exports part, you mentioned that, your Latin America versus Africa. I just wanted to get a sense of the difference in competitive intensity between the two. Would Africa be a little more competitive in terms of, since you sell the Boxer and, there are a lot of Chinese players over there compared to, say, Latam markets where your Pulsars would be selling more? Would that be a fair assumption?
No, actually the Latin American markets are more competitive. And by competitive, I mean because you're competing on multiple dimensions. You're competing on, brand is much more important over there. Pricing, of course, is. Then there are multiple products, etc. In addition to that, we have the Japanese as a major factor over there, who are not so big in Africa. So we compete with Indian, Chinese, Japanese in Latin America. So I would say Latin America, though smaller market, is a more competitive market.
Okay, got it. And just last one on your Pulsar portfolio, your classic portfolio, as you said, it just kind of contributes around 7,000-8,000. From a strategy perspective, don't you think that it could, those are too small volumes to risk your brand dilution of Pulsar? And if your twin disc is giving you much higher volumes, why not focus on the higher end of Pulsars rather than diluting a brand on the lower end without contributing much to the volumes?
So it's a good point, and this is always a dilemma when you're trying to stretch the brand and trying to expand the segment, because you know that we have a 40% plus market share in the segment, and if we expand the segment, then we'll get a disproportionate share of that expansion. So it is important to expand the segment, but we've got to balance this tension between the brand and trying to take it. At least when we expand it downwards, to be careful about it. So we are trying to do that in a little bit of a clever way, I think, which you will see in the next couple of months. Trying to take the Pulsar Classic more into the zone of younger people and, that kind of a thing through how the product will be presented. So I think this will size. So it's not really a cheaper Pulsar, It will be a different Pulsar and positioned very differently. So it's like a sideways movement rather than a downward movement in terms of how the product is presented. And our strategic objective is to hit the more commuterish 150cc bikes, which are slightly cheaper than us, from the Honda portfolio, as also to take up the 125cc customer, younger customer in the 125cc who wants to take a 150cc, but the pricing may just be slightly away. So we are attempting that with the Classic. So, and we are conscious of this point that whatever we do, it should not sort of take away from the fundamental Pulsar equity.
Right, and just last, in terms of your domestic two-wheeler margins, do you see you've seen the bottom of your margins currently with commodity prices pressure? I mean, take one or more quarter where you're, lag of other expenses. But from a margin perspective on the domestic two-wheeler side, do you think this is the bottom and things should only improve going forward? Because exports you mentioned.
So because I said that the mix is going to improve in our favor. I have maintained that the CT100 has reached what we would say peak, and the growth is going to come from Platina. The growth is going to come from Pulsar. We have taken the prices up in the case of the CT100. So my view is basically the motorcycle division, domestic motorcycle division profitability should improve from here on.
Okay, great. Thanks and all the best.
But again, don't hold me on a quarter-to-quarter basis because the 5-5 scheme in this quarter may hurt the domestic motorcycle much more than what it did in the quarter 2.
Right, got it. Thank you so much. All the best.
Thank you. The next question is from the line of Basudev Banerjee from Ambit Capital. Please go ahead. Basudev Banerjee from Ambit Capital, your line is unmuted. Please go ahead with your question.
Yeah, thanks sir for giving the opportunity. First question is more of a long-term understanding. The bulk of market share which Bajaj gained this year, definitely Pulsar has moved up all the way from 55,000 to 80,000 plus, but the entry-level M1 segment, as you said, you target market share, you have almost achieved that. Led by incentivization partly. In the longer run, once you have gained the market share, then how do you see the demand elasticity with gradual price hikes? So once we have got the loyal customers, if you start again taking price hikes in CT100 gradually and going back to the erstwhile pricing, do you see a risk of losing out the loyal customers?
It will be a judgment call in the sense, these things are dependent on a judgment between in what size of steps to take the customer upwards. CT was actually, it's a very classic and a very renowned and trusted and old brand of Bajaj. So that's a big plus in our favor. Then we had gone out of CT and then CT got reintroduced and it immediately got very, very well accepted. Of course, the hammer was, the pricing and we took that in. But we're conscious that there is a very old equity for CT. But that doesn't mean that, we can just straight away start taking the prices just because we're selling few tens of thousands. It'll be a judgment call. We'll have to take it in small steps and see how we can lead the customer upwards. We'll try to buttress this impact by also having some incremental innovation, try to give the customer a little bit something which they can value in CT and use that as a lever to take it up. So that's the way we will work CT, in incremental and small steps.
Yes, just thinking from the angle that your incentivization of CT coincided with rupee weakening at an accelerated pace and exports also doing fabulously well. So if exports and favorable currency turns adverse sometime down the line, will you be able to continue with the incentivized rates for CT? Because today your margin moved down from 20 to 18. Maybe if currency goes adverse, then 18 can also become lower theoretically. So how to look at that?
You see, you must understand that the strategy was independently developed. But of course, when we look at the scenarios and the outcomes of the strategy and we put everything together in the P&L, we do take a overall corporate view, that's obvious. But the domestic CT strategy and the Pulsar strategy was independently developed at a time when, the 73 business was not even on the horizon. This was January, February when the thinking was taking place. So it's not that we saw this tailwind coming. In any case, as you know, it's not as if we've got the 73 in our bag. We are only getting 69 right now in our bag, right? So we are quite driven by the fact that we have to substantially increase our market share, and we're doing that through a combination of, we're doing that by focusing on the entry segment and the sports segment through a combination of price and product innovation in just these two segments. We will continue to soldier on. The up and down of the margin of the rupee will have to be watched, but it will not play the decisive role in shaping the strategy.
Sure, sir. And second question, as you said that post this sudden knee-jerk reaction of insurance premium increase, so it will be a transitionary phase of 4-5 months for the customers to get used to. But now in coming almost 18 months, we will see two such transitions of safety norms coming in and again BS6 coming in. So after this insurance things normalizing, your destocking happening after festive season, by the time your safety norms will come into picture, and then again some pre-buying before BS6, again the post BS6 transition phase will happen. So in that prolonged phase where industry will go through such turbulent, decisive scenario, do you see the overall incentives to sales in FY20 further increasing as you must have increased in FY19?
No, I don't think that this turbulent period, as you call it, can be addressed by incentivization. In fact, in answer to one of the queries, Kevin did mention that there will be some advancement of sale in 1920 because now people have gone through this one cycle. The dealers have gone through this one cycle. One good thing is that there is some certainty. Last time when it happened, with all the Supreme Court interventions at the last minute and all those things and the interpretations of what does a changeover mean being very, very fluid, had caused a lot of uncertainty in the supply chain of every OEM. This time, because of the past experience and the very advanced clarification of Supreme Court which has come yesterday, at least there is certainty on what a changeover means. So that will remove some of the uncertainty. But yes, there will be these changes. I think the manufacturers will have to, through the dealers and directly, educate the customers. I don't think these things can be addressed through simple fiscal incentives,
Sure. And last
excuse me, this is the operator. Mr. Banerjee, may we request you to come back in the queue for a follow-up, please?
Kevin here. Maybe we'll stop at the last 3 questions, please.
Sure, sir. We would request participants to please limit their questions to 2 per participant. For any further questions, you may come back for a follow-up. The next question is from the line of Priya Ranjan from Antique. Please go ahead.
Yeah, thanks for taking my question. My question is on CT100 volume. When we talk about the profitability of that model, I mean, there has to be some volume where probably at 120,000 a month or 150,000 a month, because my guess is that the product will not be a loss at contribution level. So at 120, 150, if we are able to achieve that, then probably the product can itself become profitable without taking too much of a pricing action. So my first thought on that, and second is on there's a lot of media rumors on 125 KTM. Will it be the separate product strategy from what we are talking about, the M3?
No, as far as M3 is concerned, when we're talking about, there's no question of KTM being a part of the M3 at this point of time. And as far as the KTM 125 rumors are concerned, I'll just say they are rumors as of now. Nothing from our side, no comment from our side. As far as your first question is concerned, at what point of time we will consider the CT100 becoming neutral in terms of break-even, etc., that we will not share. But yes, if CT goes from 80 to 120,000, we'll be thrilled.
Yeah. So, and just coming back to that, we have always stated probably our market share should be around 23, 24. So, any timeline or something we want to achieve it by, say, in FY20 or so?
So, we have always said that that's the first target that we have. And the 24% that we are talking about was at the exit point of March. It's not for the whole year basis. So fortunately for us, at exit point of September, from 15 we have moved to 20. Hopefully, if all things go well, the second half from 20 we should go to 24. Like I said, this is aspirational. This is what we are targeting. It's not a situation that I can confirm we will reach.
Okay. And just on, one question was on the market disruption, which we have been talking since the last 2-3 years, that M1 will become bigger and M3 will become bigger and M2 might get scrapped off or shrinks significantly in the overall scheme of things. So do we see that kind of scenario emerging with the BS6, post BS6, given the price differential might be much higher in M1 and M3?
No comment on that because that's all speculative, but at least I can say historically, if you go and see what's happened today, the reality is very much there. The M2 has actually shrunk by almost 10%. Last question, please.
Thank you.
Last question, then we need to end the call because Rakesh is a busy man.
Sure, sir. We take the next question from the line of Jigar Shah from Maybank. Please go ahead.
Good morning. Thanks for the opportunity. My question pertains to whether, Husqvarna will be launched this year, and also if there is any update on the Triumph relationship and how it will be taken forward.
So, we are introducing the Husqvarna. We'll begin by introducing the models sourced out of Austria, but the teams are already working in extending the partnership of design and development in India for the Husqvarna brand itself. at this point of time, I cannot talk much more about the calendar of introduction of the new line of Husqvarna. In terms of Triumph, our discussions are progressed extremely well, and we're dotting the I's and crossing the T's right now in terms of the way we will work. But both the R&D teams and manufacturing teams are already talking in detail. And as soon as we bed down the protocols about way of working and all those things, we should be able to announce the whole thing formally in a few months' time.
And one last thing on KTM, I think the performance in the second quarter was very good. So any comments, any outlook for KTM in the rest of the year?
The second quarter and the third quarter results, which have yet to be announced but which we have access to, has also been extremely encouraging. The first quarter that we saw was a little low because of the overstocking that took place in the fourth year quarter, as in the fourth calendar year for them, and therefore they corrected the stocks in the first quarter. Second quarter, as you have said, is very good, and the third quarter, as the results that we have just seen, is also very, very good.
Okay, thank you so much and all the best.
Thank you everybody for the interest. Thank you, and over to you all, please. Aditya.
Yes.